we are in the part 2 of the basics of order flow session. So I thought like first let me talk about directly about the strategy since many people last time they asked about do we talk about trading strategies in this particular session or not. So I'm going to take an example of an last Thursday session. So one of our live sessions. So we used to do frequent live sessions on market profile, order flow and VSA. So one of the last live sessions, so we talked about an very interesting concepts. So it's a kind of a combination of market profile and order flow, where we use market profile to understand the market context, and we use order flow to time the trades. So I'm going to show you one of the video here first, and then we'll talk about the principles and associated principles and the basics about that. So this is like 20th June, 1 o'clock to 2 o'clock session. So I'm going to fast forward a lot because I think around 1:30 or somewhere is what the live session started. So I'll also make it with full volume. So test also increases a lot. And that is something we have to understand in today's context. So I'll just mute that. So this is one of the time where you can see that the price action is going outside the value area. This is one of the theme. Value area is a thing. I'm sure you would have listened to Dean's series on market profile. So here we are seeing in value area, and price is going outside the value area. So typically, many at times, emotional traders, they try to drive the price action up. You might find some very good opportunity around that level as well. So very frequently, you can see this kind of setup which is happening in the markets. Maybe in a month, maybe 2-3 times in Nifty, 2-3 times in Bank Nifty, couple of times in stocks. Kind of a repeatable pattern though. So this is like a 20th June session, right? On a 20th June session, the price action was like right from the morning, price was keep going up very slowly, right? And then it also does like a lot of sideways price action, and it started keep going higher. So, but I was looking into the order flow. There are not much of a clues around that time, right? Let's see how the price action is going on. So I'm going to run this as an 2x speed. I'm going to run at a 2x speed here. So let's say, I think there is a provision to run this as a 2x speed. Yeah. So means 2 times of the speed is what I'm going to run. And mid of the day, the price was keep going higher. So of course, Bank Nifty was doing nothing much. Bank Nifty was totally going sideways. I think, yeah. So somewhere around this time only things are getting quite interesting. You could see that the I period. So notice the value area zone. So here's the value area zone. You can see that price is spiking up, right? So very quickly, what I had done is like I got into order flow, because order flow is where we will be able to time the information. Price keeps on spiking up as if like some strong money is keep on buying. But if you could see the order flow charts, right? So you can see like a lot of zero zones you can see over here. So these are like kind of a stop hunting, and you can see a high density volume over here, right? This is something like some strong buying. It looks like it's strong buying is happening. Delta is getting bigger, right? And then volumes are increasingly getting bigger and bigger and bigger. So this is where I said like you have to be really careful about the market price action, because this is where the exhaustion happened. This is kind of an exhaustion candle over here, and you can see that it's giving an impression that price is rallying, high volume. Some big traders are coming and buying. So normally, if somebody is looking into the order flow, that is how they would have taken the decision over here. But this is where we got very curious about price. Maybe what I said is like maybe what is happening in the next candle is even more important, because when this is happening, you have to give your all ears because price is rising since the morning. So since the morning, the price action was like this. So price action was like it was rising and it's chopping around, and now mid of the day it's like spiking up. That is what I said. Like you have to wait for one more candle. Maybe that candle, if it is giving any clues, it could form a top, and the price could be swiftly coming back down. So that is what my one of my context over here. So I also given a marking saying like it is an exhaustion bar. So that is exactly one of the context that we will be discussing in today's session. Like we're going to discuss about something called exhaustion and trapped activity, how the exhaustion actually happens. So there are many ways exhaustion happens in the markets, but one fine way how the exhaustion happens in the markets is like a trapped activity. So the second bar also started. You see that there is a timer running over here. It says how many seconds are left for the day to close. I mean, how many seconds are left for the bar to close. So what is so interesting about here is like we had an exhaustion bar, and then so far there is not much of a clue. Still, whether the market will top out or not, still not much of a clues. And my attention was completely on the order flow. So what's the time here? Almost 13:26. So it is a nifty weekly expiry day. And the price action, let me a little bit fast forward here. If it is 3x, it could be even more better, but unfortunately in this media player, I have only 2x only. So I was explaining what is an exhaustion bar is all about during the live markets. So one more bar price started keep going higher. Definitely anybody who is a normal trader, they would have been allowed to chase the markets. But if you know order flow here, you could have been able to control your emotions. You could have been looked for a shorting opportunity, not in this bar, but when this low of the bar is getting broken down, we could have been looked through that. I'll tell you the reason why. The reason why is like look at this particular bar activity, this volume here. So the buy side volume here, right? Aggressive buyers has been showing up, and that aggressive buying number is now going below, I mean, above 800 plus points. So 800 plus points means it's a big single price volume. So such a big volume which is happening at a fresh day high, and so look at the numbers are now getting like 917. Price is hitting an fresh day high. So we are seeing a fresh day high is what we are seeing here. So such a fresh day high, and despite that, if the price is breaking down, that is what we called as a trapped buyer. So trapped buyer is a way big buyers are getting into a trap. At times, even it looks like a big buying, they might get into a trap also. That is how the exhaustion happens in the markets, right? So I was drawing a line. I also putting a stop loss levels also. And when this level is getting broken, my trade entry is likely to happen around that level. So look at the time is like 13:30, and price is like still chopping around. What should not happen is like the day high should not happen at all. So price was like this is the where you can see that clearly price is going outside the value area, sign of emotional buyers, right? So when emotional buyers are there, we have to learn to take advantage of them, and that is where the opportunity is also at the biggest. So I was talking about some yesterday's context, how it is different from today's context. Let me fast forward here. So I also talked about one another concept called absorption, which also we're going to talk about here. So look at the big volume here. So volumes are bigger on both the sides, and the volume is breaking down. So when this is breaking down, right, that is where we talked about buying an put option. So one of the put option which was trading around 23,600, right? It was trading around maybe I will say like around 28 something, 28.7. Maybe I'll do one thing. unmute it, and then so that you can hear the live conversation, what we had exactly discussed. I'm going to move to 1x speed. So the VWAP is like 51,500 in best case, day low test. The price still trade outside the value area. That means longs has to be careful because many a times longs will be tricked around these levels. Let me pass here. Do you guys able to hear the sound? If you just could confirm so that I can play the video, because sometimes the speaker sound may not be able to hear in the sessions. If you could type yes, so that I'll get a fair idea that you guys are able to hear the audio of the media player video. Can anybody confirm that? Oh, all right, great. Thank you, Prasanna, Anoop, and everyone. So let me play the video here. And one of the good trade location to test our shorting skills here, intraday shorting skills. And I period is having a lot of single prints. So first thing is like, if at all, if it is not going to be a double distribution day or something, the I period low is what usually has to come back and clear it. Is it a short? If you ask me, yes, it is a short. It's an absolute intraday short. Look at this particular bar. We are seeing some absorption as well, like 1066, 872 on both the sides. Kind of absorption. Absorption and price breaking down is good. That means some smart money had entered around that level. So thus far it's exhaustion bar and trapped buyer. And trapped buyer is one form of absorption, kind of a smart money absorbing the buyers. So exhaustion bar and absorption bar it is. So first thing is like there are two immediate observation. One is the I period single prints, and second was the point of control, and third one is the day low test. Not exactly day low test, maybe yesterday's low test. That's the best of the best case scenario. Let me pass the video here. So you might think it is going to be a fast price action, but we anticipated even more slower price action. I'll tell you that context also. So let me play the video again. So it is running at an 1x speed. So it's going to be like another 22 minutes of video here. So I want you to listen to that very patiently, right? So that you get the gist of how much patience is required, even if you want to do an intraday trading. And the location of the trade is pretty much important in today's case. Again, let me have to pause the video here. So by the time, if you could see that, volumes are not really happening, nothing much. So if you could see the previous bar volume, almost like literally no volumes was there, right? So trapped buyers and then literally no volumes. and that's an indication that nobody is serious enough yet in the markets. The buyers are not serious, and that is how the buyers auction comes to an end from an intraday perspective. And slowly the sellers will take control of the markets. So you're going to see and how the sellers are going to take control of the markets, right? So just like that, they're not going to arrive. Slowly they'll be inching up, and slowly they'll be taking control of the markets completely. And when the big volume is happening, almost most of the things will be done, and that is how majority of the time you're going to witness the corrections, right? So smart money already loaded at the top, right? That is what we are seeing here. And definitely this is whatever I'm showing you is not a post-mortem. This is one of the live session we are done on day before yesterday. Volume for last couple of bars has been quite heavy. So since another J period is about to start in another 3-4 minutes, so maybe price might be tending to trade over here for quite some time, and then we should be start seeing the downfall. That's what I'm just thinking here, because at the end of the day it should leave some minimal tails. So as of now, straight away, if it's gonna go down, right, it will leave a lot of high period tails. Let's see. So still some time this sideways has to continue for next couple of bars. Maybe once the J period started, the auction should start getting negative. Because structurally, right, it should not leave like a lot of single print tails, which is very rare. Yesterday we had seen that. I don't think today we're gonna see that yet. Maybe still little bit of up move, and then should start correcting towards that. Sometimes it can go as close as to the high also, and then it can start correcting. So another 3 minutes, not 3 minutes, but 2 minutes. The J period is about to start, which is very much important to form the small tails. I move little fast forward because so I'm just you can see that the J period started. 600 put option is like 28 rupees. For minimal risk. The 600 put option is like 28 rupees. Like kind of a minimal risk, one can try with that. So this is the time I was talking about buying an 23,600 put option, like today's expiry, weekly put options, which was by the time when we are looking into that, it was like trading around 28 rupees, right? That's what I could be testing it out. But not with like, I will maybe keep on betting my fortune if you ask me, absolutely no, because I'm still betting against the one-time trading. you can still see the frustrated markets over there, like heavy frustrating, almost like the price has been keep on going up right from the start of the day. Almost absolutely still there is no volumes at all, right? That is something crazy. Like majority of the time, right, the best opportunity comes during mid of the day. So yeah, nobody has the patience to wait till 1 o'clock or 2 o'clock to say take such kind of beautiful trades most of the times. But that is not true if you are a market profile user or an order flow user. How it is having minimal tail, I think it's a good time to look for a correction. I was talking about 23,600 today's expiry put option. When we spoken, it was like 28 rupees. Look at that, the tails are like very smaller, and still the order flow pattern remains the same, which is very important. Let me pause the video here. So if you could see that still, if you could see the volume density, right? The volume density is still not started yet. So already the smart money had onboarded at the top, but still I'm not seeing any sign of strong money coming, and suddenly they're trying to push it down. That you're not going to see many at times, right? So what you're going to see, I'll show you. And that's a reality, because we might have some very weird thinkings about volumes. Big price action and always push it down. And exhaustion will not happen like that. And exhaustion always happens with big volume, and then volume slow down, and then acceleration of the volume. I think the video itself another 13 minutes long, but still I would recommend you to watch the complete video patiently, so that you can get the real time gist of how to observe the volume activity. That is the most key thing here. So volume still better. Will not say like it's lesser volume, but reasonable volume. And the context here is the J period completely cleared? Not yet. But ideally, it has to supposed to get a clearance here. Let's see where that volume is coming in. That is what it is very important. So far, no aggressive volumes to test towards the point of control yet. Volume has to get a little bit more aggressive also. But not aggressive yet. So hardly 1,500, and still we have 1 more minute left. Still a very low volume selling only. Now 2000 plus, yes, it is getting a little aggressive still again, but still not enough. Aggressive means we should feel the pulse. A lot of zero zones, that's fine. Some sweeping is happening, but still no aggressive price action yet. I'm not even able to see any big single price action yet. It should be getting even more aggressive. So anything, the auction got broken down, but one thing there, the single print zones got a clearance. Price is now getting back into the value area. That is primarily important. And what is also important here is like price just nearing the breakdown of the auction direction. That is even more important. But as I said, still the intensity is not there from the order flow perspective. Oops. Print 946, yeah, little intensive, still not powerful yet. Because not even a single price volume is not there. Volume was there, 4,000 lots. Delta is okay kind of delta, 1,087, but still no big single price selling at all. How about Bank Nifty? Bank Nifty also got back into the value area. Yes, so I think 2470, that's what I'm talking about here. Like aggressive sellers showed up. They're a little late, but they showed up. 2550. So they started with the lightweight volume. They aggravated a little bit, and now they are again, once again, they are aggravating. That is very much important. Look at the delta now. Only we are seeing a big negative delta at all. So very late price action, but still much needed one. Still on the verge of auction change in auction direction here. Looks like more or less they're going to get through that. There's one TPO down, and still they are yet to get back up. Auction direction is about to change negative. That is, yes, it turned negative. That is very important. Look at that. So high volume, big selling pressure. Now slowly they aggravated the volume. And before that, learn where the smart money entered, how the absorption happened, the exhaustion bars, and then absorption bars over here. Right? Trapped buyers over here. Huge stop loss hunting. So the stop loss hunting. So shorts got triggered. Weaker shorts goes away, and now stronger shorts are coming into the picture. And I'm just checking the option premium. Now it's like from 28 rupees, it is now like 75 rupees. Right? A reasonable profit booking, some temporary profit booking, but I believe like still there's a odds. Maybe even a day low test is also possible. But benefit of doubt, it's up to the person whether they want to continue or they don't want to continue. It's up to their wish. So let me pass here. I hope you had some great idea about what kind of emotions has been played out and how things has been played out over here, right? So that's a very interesting. I would say like it's more of a very interesting setup to talk about in today's session. So let me pause here. I hope you had a wonderful learning, and don't try to expect same kind of option every day. That is what it makes the trader weaker. Uh, Definitely, market will show up this kind of opportunity. So all you have to do is like you have to watch the market very closer. That is very, very important. All right, so that is what the context here. So what you had seen is like a kind of a price action where the option premium went from 28 to 75. I think at some point in time it even tested something like 78 or 80. I'm not very sure about that, but I have to enter around 28.7 something, and I have to close my positions around 75 itself. So I just closed for the day, even though my expectation was like day low test. So I thought like it's a benefit of doubt. There's a reasonable money on the cards. So 28 to 75. So that kind of opportunity with a precision, right? That is what you can expect from order flow, the precision setup. So now we go into the basics, like what exactly, maybe if you are a beginner to order flow, right, definitely you should learn this concept behind that. That is what we're going to discuss, right? So let's try to start with some of the order flow principles here. A lot of order flow principles are there: volume cluster, initiative drive, responsive auction, stacked momentum, delta positioning, delta unwinding, relative volume, liquidity, volatility, exhaustion high and low. That is what one of the concepts which happened in the video. And then stop hunting, delta divergence, strong secure low, weak secure low, zero zones. Of course, these are not all the order flow principles are theoretical. Like some of them are like practical one, which we added over the period of years. I've been observing order flow since 2012 onwards. So more than a decade, I've been observing order flow. So what at many places you can see is like repeated volume patterns. So that is why we look into the order flow. So when you start watching the order flow on a daily basis, right? So what happens is like the market will slow down for you, and it will give you a fair idea which is a right trading opportunity, which is a right location. So if you would have seen the video, maybe I think it will be uploaded to the YouTube, I guess. So when you have time, pause the video and then re-watch the video again, so that you'll get the gist. You'll have a even more and better idea about how to deal with the market in real time, right? That is what we try to teach our students many at times, because post-mortem anybody can do that. Live market observation is something which requires a dedicated practice. So talking about that, so one of the key price action that we're going to talk about in today's session is like initiative drive, absorption. Absorption is nothing but kind of a smart money, right? So many people's idea about smart money is like different. Some people think FIs are smart money. Some people think Warren Buffett is smart money. Even the Rakesh Jhunjhunwala, the late Rakesh Jhunjhunwala. So he's considered as a smart money. Of course, he's a smart money. But the question is, are they smart money in my time frame? I'm an intraday trader, right? So he might be smart money. He might be buying some X amount of stock. Let's say Warren Buffett is buying Apple. He had dumped almost like $360 billion in that. He could be smart money for the next 3 months or 6 months. Not necessarily today itself he has to be smart money. Of course, many times Warren Buffett invested, right? The Apple stock went down by 2%, 3% down, in fact. So the question about the smart money is like, am I dealing with the smart money in my time frame? From an intraday time frame, who is the smart money? So that is where order flow points out to us. So you'll be able to understand where the smart money is coming in. That is how the absorption happens, right? Of course, initiative drive is also institutional money where they move the markets, but absorption is also a classical smart money who absorb big traders. A small fish catching the big fish is the absorption. And coming back to the point here, the initiative drive looks like it is mostly directional. So initiative drives are like kind of directional. It happens with volume, it happens with big deltas, right? So many big deltas, bigger volumes. That is what you can see in the initiative drives. There are various ways an initiative drive happens. One of the peculiar thing is like one time framing, big volume, big delta. strong trending price action. That's a key thing here. But if you look into the absorption also happens with big volume, but you will be seeing like, so here in this example, let me zoom and show you. The price was like rising, and a rising price action, obviously it happens with a bigger volume, and the price stops there and it keep going down. That is how the absorption happens. Usually it happens with like a U-shaped reversal, where big volume happens at the top, right? And that is quite evident. Very clearly we can see only through the eyes of order flow. Can I able to spot with the normal candlestick charts? If you ask me, absolutely it is not possible. Absolutely not possible at all. Let's move a little forward. And then we have consolidation. So consolidation is like kind of lackluster volume, usually happens during middle of the day. Many a times you can observe even around 10:30 or 12 o'clock, or sometimes even 1 o'clock. During middle of the day, right, volumes will be dry down, liquidity will be very much dry. So you'll be seeing like loosed price action, very less density price action, not so big volume, not so big single price volumes. Nothing would have been seen around those levels, right? So literally you'll be expecting and more sideways price action, which is a clear indication that nobody is controlling the market. Just lacklusterly prices just keep trading here and there, just like that. No news, nothing is there. Calm markets. Sometimes even markets will be showing emotions at the open. Price big gap up and big gap down. But after the big gap up or gap down, right, you could have been still facing a dull, boring price action. So off late in the last couple of days, last 2 weeks, right? So market has been got into a very compressed mode, particularly Nifty. After the election results, what happened is like market becomes very quiet. So you could have been seen a lot of consolidation in the last 2 weeks of price action. Particularly positional option buyers would have been in a deep trouble. So we are very much aware about that. We very much track about the volatility. So we keep our expectations minimal. So we keep our expectation to reasonably up to the point what I should trade, right? So realistic targets is what we generally anticipate if anybody who is going to use market profile or order flow kind of concepts. And consolidation is one thing that we cannot ignore at all, because that is what it happens majority of the time, particularly if you're going to trade during middle of the day. And here comes the most important concept here. So we'll straight away jump into the initiative drive and absorption. So initiative drive is more of an impulsive move, strong price action, trendier move, fast price action is what you'll be seeing with the initiative drive. So it is characterized by high volatility, high volume, high tempo. So high tempo means fast price action. That is with initiative drive. Mostly institutional money, right? So institutional money, long-term money, they are moving the markets. And sometimes initiative drive, we will be able to see some stacked momentum also. So if I compare, you can see that if I'm seeing 3 consecutive blocks of minimum, so here I'm seeing more and more consecutive block. So here I can see like how the momentum is getting generated. So of course, the block is mentioned green because it compares diagonally. And whenever it is more than like 5x or 10x, we generally look for such kind of momentum zones where the momentum is generating. Sometimes you'll be able to identify because of this tagged momentum, you'll be able to identify where the institutional activity, where the institutions are getting positioned. Sometimes it might even very much useful in building smart money positioning strategies. We call it as a delta positioning strategies. And then sometimes we might be even seeing stacked sellers also, sometimes embedded inside the zero zones. So that is how we identify initiative drive. But when it comes to absorption, as I said, this is what something very much important, because many times you will be seeing absorption based trade setup. Very frequently you'll be finding, at least in a day, sometimes even 2-3 times also, you might be seeing an opportunity in a day. Very frequently you'll be finding trapped buyer, trapped seller kind of stuff. So it is a passive way of accumulation or distribution. So smart money reloading happens in the form of smart limit orders. You see that smart money. So they are not moving the markets. Whoever try to move the markets, they are putting a ceiling. They are creating a real-time resistance if it is happening at the top. If it is happening at the market bottom, at a fresh day low, you can identify that real-time support zone you'll be able to identify using the concept of absorption. So very useful and important one. And here's another classical example of how the absorption taken place, right? So you can see that big buyer showed up. Of course, this is a very old chart, so 579. So right now it is equivalent of like 1140 kind of lot size. So such a big volume is happening, and then despite a big buying, so right, so he's a big buyer, aggressive buyer. So opposite party is what? Limit order. So who's sending a limit order? The seller is sending a limit order. Sell limit order and buy market order are getting combined together to form a transaction over here. So if you ask me who is smart in this case, the sellers are smart, buyers are getting trapped. So that is why we call it as a absorption of buyers. The buyers are getting absorbed by the sellers, right? And we also call this as a responsive selling. Responsive selling means that despite a big buying activity, the high of the bar is not taken out and the price goes down, further it takes down. You'll be seeing like if it is a good buying, the price action would have been continued. The bar high would have been taken out, but that is not happening. That is how the scalping opportunity do happen in the markets with a very tight stop loss. That is where you can maintain a stop loss, something like in Nifty, you can maintain a stop loss of 10 points or 15 points. Sometimes if it's the volatility is very high, it can go like 20-25 points. Generally this is what the normal scenario, but during election time, right, it was the volatility was even more bigger. The stop loss was like 30-35 points, but target also something not smaller. Target was like mostly 1:2, 1:3 kind of setup. Even the example that I showed you on last expiry day, it was like 20 point stop loss in futures. Maybe if you would have taken like at the money options, your stop loss would have been like 10 points or even like 8 points if you would have timed a little bit slower, right? So that means like 28 rupees options, 8 points or 10 points will be the stop loss. So means your stop loss will be exactly coming around 20 rupees option will be the stop loss, or maybe 18 rupees will be the stop loss in your option. So at the money is like 0.5 times of the futures, right? So that way we can measure the stop loss also using futures. We can measure, we can place the stop loss, depends upon what strike price that we are using. Anyways, I'll be talking very detailed in our upcoming Converge meet as well. So I hope you get the gist of trapped buyer and trapped seller. Let's go and discuss even more in a very detailed fashion about the trapped buyers. So talking about the trapped buyers, very clearly you can sense that the price action does a U-shape reversal. That is what quite a common theme over here. Always the price takes a U-shape reversal and big volume happens at the top. So that's a classical trapped buying activity. So what is a trapped buyer or a trapped seller? So trapped traders are usually a sign of an emotional trading activity. So if you would have seen in the market profile, what we had seen, market profile, this is my value area. So since the morning price action was like keep on going higher, it builds a value area. Mid of the day, it was shooting higher. So how much emotions are there? Whenever the price is going outside the value area, that's an indication that we are dealing with emotional traders, emotional momentum traders. Volume will be definitely bigger only. But how I can time using order flow, that is where the trapped traders concept is coming into the picture here, right? So you'll be seeing a like absorption at the top. So you'll be seeing like some big volume would have been traded at the top, and the price will be slowly coming down. And then when it's coming down faster, it'll be coming down pretty much higher, pretty much sharper. Sometimes in a best case scenario, you can even see more craziness in the markets also. Of course, last Friday, that day low test haven't happened, but a sharp intraday correction happened in the markets that had given a tremendous intraday trading opportunity, which repeats like in a month at least. I would say like definitely 1 or 2 times in Nifty, sometimes 3 times also. Of course, last 2 weeks we had seen similar price action at least 3 times you would have seen the last week alone, last 2 weeks alone. And every time there was an opportunity from the order flow. Every time there was a context from the market profile as well, similar opportunity from the order flow also. I'm sure this will be repeating in the future also. So what are the characteristic of a trapped trader? They are the last trader to get into the short-term swing. So usually they are short-term market participants, means they could be some big traders also, but eventually these big traders, sometimes they also get into a trap, right? So happens with a heavy volume imbalance at the day high or day low, and it's a poor way of facilitating a trade. And the end result is a responsive activity. Responsive activity means if the price is going up, this is initiative activity. It is more of an initiative drive. If the price action is going up, which is reverting back to the downside, this is more of a responsive activity. In market profile terms, a responsive activity means when the price goes outside the value area, from the outside the value area, it is pushing back down again back into the value area, is a responsive activity. Right? I hope you get a gist of it. Let me know if you have any questions. More or less the same thing applies to the trapped seller also. A trapped seller is like, you'll be seeing a downside activity followed by a big volume at the bottom, followed by a trend reversal. Right? That is a key thing involved with the trapped seller. So we had some reasonable discussion about trapped buyer and trapped seller. Maybe in the next series, we will have even more excited trade setup. So let me pause here and let me take a couple of questions. If you have any questions, you can just type your questions in the chat. Any questions that I should address before calling it a day? Any questions do we have? Are we clear? If you're clear, you just say clear. So Anup Dixit is asking, many a time top gets broken out and we get trapped. So how to differentiate absorption and the fake breakout? So of course, if it is a fake breakout, right, it absorption happens and it keeps continuing. It will not be stopping at all, right? So I'm seeing an absorption bar. If I'm seeing just think about this example. Let's say I'm seeing an absorption bar after a day high, and further it continues. The high has been broken. This is not an absorption bar at all. If it is an absorption bar, you could be finding a clear pattern, like so absorption bar, price keep going higher, and you are seeing an absorption bar, and you are seeing some big single price volume on the buying side, and immediately the bar is taken down, the low of the bar is taken down. That confirms the absorption bar. Or sometimes immediately it will not get confirmed. You might be getting some couple of inside bars. So you might be seeing a small inside bar, and that inside bar low is breaking down. That confirms the absorption bar again, and that confirms the entry point also. Sometimes the inside bar also will not be broken. It might have like still one more high, and then it will be breaking down the lows, and that determines that it is an absorption bar again. So these are like kind of a valid methods how we can confirm whether it's an absorption bar or not. So Chandru is asking, is there a live trading session provided from your side during the live markets? Of course, you can go to learn.marketcalls.in. There you can get more details about that. So Chandra is asking a question with respect to order flow value. Is there any difference? So I think Chandra is talking about order flow values. With respect to order flow values, is there any difference? Maybe if you're talking about volume activity, you have to differentiate which is a big volume, which is a smaller volume, which is a moderate volume, and which is a good single price volume, which is a big volume delta, which is considered as a big volume delta, which is considered as a smaller volume delta. So maybe in the next week session, we will be discussing even more detailed about that context as well, so that you'll get even more better idea about how to deal with that context. So Chandra is asking, continuing to the first question, I am asking difference order flow values. I'm still not getting the question here. What I'm thinking is like, maybe if we're asking about different symbols will have different volumes. Yes, different symbols will have different volumes. maybe do the volume what we apply to Nifty may not apply to Bank Nifty. Maybe the volume which we are applying on a 5-minute chart may not apply on the same volume on the 10-minute chart, because 10-minute chart will have a different volume pattern. 5-minute charts will have a different volume pattern. Chandra is also asking about absorption and fake breakout order flow values. So absorption, as I said, if it's a fake breakout, immediately you will be seeing that. Even let's say, I'll give an example of how a fake breakout will look like. So you'll be seeing an upside activity, and then followed by that we'll be seeing an absorption bar, sometimes even an inside bar, but still the price action keeps continuing. So that is like kind of a fake breakout. That is not absorption at all. So absorption means price has to form a top and it has to start correcting. So our job is to find where it is breaking out. What is the starting point of the breakdown? So that is the entry point, right? So whenever an absorption is happening, particularly when price is going outside the value area, definitely it's a very good trade location to look for a trend reversal opportunity. So Chandru trader is asking small, moderate, large price action delta volume for the Bank Nifty future contract. Anyways, we'll talk about that in our next session. So let me pause the session here. We'll come back in the next week with even more interesting concepts. I'm sure you would have learned something new about it. And thank you for coming by and attending the session. Over to you, Mr. Vinod.
Thank you, Rajendran. That was a wonderful session again, and hope to see you guys again the coming week. The same link holds good, because I got a couple of messages asking me to send the links in the mailbox. So guys, it's the same mail, webinar link. You can use it for the upcoming session as well, right? So with that, let's call it a day, and I wish you a happy weekend. See you next week. Thanks. Bye-bye. Thank you, Rajendran.
Thank you, Vinod. Thank you.